Good morning. Today is second week. This is fourth week of February, but I will do the journal of third week. Last means at the end of the week trade setups journal. So this I have explained before that first target will be liquidation, and then we can target much higher. And today, not today, yesterday night I found a setup in Dogecoin only. One is 50% retracement and accumulated at that 50% area, double top, and then there is neckline. So there is huge number of liquidity below this area and this area. So my first target was this liquidity. So I wanted to take out this liquidity, but market didn't go directly to that liquidity, so I exited manually with 1:1. The problem was with huge stop loss. Instead of this area, I should have kept my SL to this so that the risk reward will be much favorable. So if I keep my SL like here and exit, it is like 1:5. But if I keep my SL above this area, it is like 1:2, 1.2. So, and another thing, I exited 50% of my quantity here. Instead of 50%, I should have booked 30% of my quantity and trail my SL to this area so that the trade will become risk free, and rest is means the rest will be history. The rest 30%, the rest 70%. So I have calculated if I am taking the trade means take profit at 1:1, suppose 1:1 or greater, then it will be like 30%, like it will be 0.3%, and from SL side it will be reduced. And if I book the next profit at 1:2, so it will be 1%. And if I book means that rest 20%, means 50% I'm booking at 1:2 and rest 20% I'm trailing and booking at my own level, or next means this liquidity, or 1:5, then it will be like another 1%. So it will, the total will be 2.3%. So the accuracy will means the profitability will increase. But means suppose, let pause the video. So suppose if I follow this one, then the suppose 80%, if this type of setup is having 80% accuracy, then and 1:5 it is touching, then 2.3 into 80, 184 minus 20 trades are going directly to my SL. So it will be like 164%. If I trade 100, if I take 100 trade, then it will be 164%. And suppose if it doesn't go to 1:5, so let's take 100%, 164. So it will vary between 100 to 164. But if I follow 1:2 and my accuracy is 60%, then it is 120 minus 40 numbers of direct losses, and some will be like break even also. So it will be like 80. This one will be 100, this one is 80. So I think this is much accurate or much better, because and this one will bring peace to mind also. In this there will be series of losses, so mind will not be okay to take a series of losses without any number of wins. So this setup is much better than this. The problem is holding on to 1:5, that 20% means the 20% of the quantity. So even if 1:4, it will be like 0.8%, 1:3, it will be like 0.6%. So this percentage amount will vary, and this one will also vary but little bit, but this one is much favorable. See, 184 in theoretical example is like 184, and all 80% of the trade won't go to 1:5. That also we have to keep in mind. So that's all for the guidance. This is much favorable even if I get 100% out of 100 trades.